Hey traders, Raghee here, and in this free recap video I'm going to walk you through a trade in the Dow that was an alert for us over in the Simpler Futures room. And the setup was really taking advantage of a couple things. I'm going to walk you through some of the clearing range setups and then also ultimately what the trade alert was that I sent out. So what I'm dropping right now on the chart are the three lines that matter for our conversation. When I sent the alert out and then the clearing range. And you'll notice that the clearing range high-low, the high was broken if you wanted to take the clearing range buy as we traveled higher through, as you can see here. If we have a 25,262 high, I'll add 3 to 5 points to that. So I wouldn't actually buy this until about 25,265. That would be the clearing range long. But because my mistrust for this market's kind of high and we're going into the G7 weekend and a number of other reasons, I still have a bullish bias. That's very important. In our room all week, actually, but today too, we were nothing but looking for the long position, which means I'm not saying we turn a blinder on to the short side, but yeah, we kind of do. You know, we basically focus on one side of the market, looking for very specific patterns and setups to occur. And then those ultimately become our trigger. Well, rather than buying up here at 265, what we did is we sent an alert out because I felt this market was choppy enough and we could correct back to 25,220. So what I want to show you here is, you know, you can play a momentum breakout and there's nothing wrong with that. But remember, your stop and your risk is going to be tighter and smaller when you look at a pullback buy. Smaller stop, smaller distance from the entry to the stop. Again, tighter amount of, I'm not giving the market as much leeway. And the risk here is that 220 doesn't get hit, right? That's the risk. The market, if you're a momentum player, you'll realize even though the risk reward is not great for momentum plays, generally speaking, you will seldom miss a move because in order for the market to keep moving higher, it's got to go through my buy stop at this level. And that's exactly how that gets placed. But even though this is the better risk reward entry, it doesn't mean that my buy limit here is going to necessarily be reached. So the risk is the movement that happened consequently, you could have missed if we didn't hit 220. You're seldom going to miss a trade with momentum. But what's the flip side? I got 40 more points, 45 actually, in my pocket. In fact, 265, 270, those were upside targets. I wouldn't have thought about a 270 or 280 upside target from 265, but that is something we can consider from the pullback buy. So think about that. If you have, directional bias that's bullish, think about multiple ways you can get long a market. Think about multiple time frames that could absorb a correction and get you long. Think about multiple momentum plays that could also, again, get you long. And then you can start to decide, one, which one's right for you, and two, whether or not you want to take more than one of these entries. And that's when you can start to really customize a strategy like I teach and start to make it more your own. Start to customize it to the way you like to enter. Maybe you like momentum plays. Maybe you like the confirmation of a higher high. Know thyself, right? Maybe you like the lower risk. Maybe you like the pullback buy. I've always liked the pullback buy. That's been something that comes very naturally to me. So 220 is a no-brainer. 265 would be aggressive. So these are the kind of intraday day trade considerations that I'd love you to make, and know that both are available. So depending on what the market does, pull back or break out, you've got a strategy that could tackle each one. All right, I'll see you next week.